I'm Duncan McLeod, and this is the TechCentral Show, brought to you today by MTN Business. To learn more about their solutions, visit mtnbusiness.co.za. And while you're there, why not also pop over to youtube.com/TechCentral and hit the subscribe button and never miss another one of these shows. You can also find us on Spotify, Apple, Google, Pocket Casts, and wherever you listen to quality podcasts. So do check us out. Now, Connie Bloem is co-founder and MD of a company called Mesh.trade, and they specialize in all things blockchain and the future of finance. Connie joins me in the TechCentral studio now to chat about concepts like AltFi and DeFi, which I have to admit I know very little about. Connie, welcome. Thanks for making the time.
Thank you, Duncan.
Before we get into all of that, let me ask you a bit about yourself. What is your background and how did you get into the world of AltFi and DeFi?
Oh, that's a very interesting story. For my sins, I started out studying industrial engineering, which is quite controversial when it comes to the world of finances and technology. But I've always loved the financial industry, and since the moment that I started working, I tried to enter into the banking world.
Okay.
So what I effectively did is I started out in management consulting. And when I started out in management consulting, I started building FX trading applications. And the world
FX.
FX,
Oh,
so
FX,
foreign
right.
exchange trading applications, and it just opened my world to the potentials of technology. But also coming from an engineering background, I started playing around with blockchain in 2012,
Okay.
and this weird thing called Bitcoin existed, and at that time, no one knew what it was.
I hope you bought some at the time.
I entered into a little competition with a friend of mine, and we did win some, but that was ages ago. So we started playing around with the technology, and we started playing around with the potentials of it. And my professional career started aligning with my personal interests here. But I was still very young, and I knew that for me to really go into the financial markets, I needed to bolster myself a bit. So I went into financial engineering, did a postgrad in financial engineering, and then I started working for a company called MD Solutions. And
They're an IT company.
Yes, it's an IT company, and they implement big treasury and trade systems in banks. So I did projects with all the major banks, actually in South Africa, across Africa, even the central banks as well. And it was fascinating for me to be in that world. But always there was something missing for me. And I like creating, but also I saw so many of the problem statements in the capital and financial markets. And it was frustrating for me that I couldn't actually effectively fix these problem statements. And that coincidentally led to the creation and the existence of Mesh.trade or Mesh.trade. And I'm a very lucky person where my passion and my profession can be in the same direction.
Sure. Now, you're the co-founder. Who
Yes.
did you start the business with?
So I started the business with Andries Brink, and he is currently the CEO of 42 Markets.
Okay.
And he's also the founder of Andile Solutions, where I started working as well. So we got to know each other through that business. And when Mesh started to come around, we decided to do it together.
Okay. So what does 42 Markets Group do? I presume it's more than just Mesh.trade.
Yes, it's a lot more than Mesh.trade. So the biggest company within our group is Andile Solutions. We also have a company called FX Flow, which is a treasury and trade business, and they also have a platform. We have lovely conversations with them and also learn from what is going on in their technology in their space. There is a smaller business in there as well, which is still kind of a project, but a business which we were very excited about called Finmio, which is a operational risk management system. And then the biggest one is then Mesh.trade.
Okay. So you started Mesh.trade to solve what particular problem or problems?
You mentioned at the start, what is AltFi? What is DeFi? What are all these kind of terms that we're throwing around? But maybe I can give you an example. I don't know if you ever watched Forrest Gump.
I did.
And at a time in that movie, he said he invested into a fruit company.
Okay.
And that was Apple that he invested in. But imagine at that time that you could invest in Apple when it started coming out. How great would that be? How big would your portfolio be? And the fundamentals of Mesh is sitting in that question of why can you not invest in some of these biggest, newest companies that are coming up. Imagine Stripe, that is one of the biggest fintechs that currently exist. We all read about them when they were going through their VC journey,
Yep.
through their PE journey, and we're all sitting here like, can we invest? Can we get into it? And I'm asking the question, why not? Why are the capital markets restricted? Why, if I have 10 Rand, can I not sit around the same table as someone that has 10 billion?
Mm-hmm.
I'm not saying that I can buy the same ticket size as what you do, but at least give me the opportunity.
Yeah.
At least give me the opportunity to look at what is available there. But also, I'm in South Africa, you're in South Africa, or we're in Europe, or we're in America. But we can't trade across borders.
Mm-hmm.
Why not?
Regulations, restrictions, reserve bank rules. I guess there's a lot of friction involved.
Absolutely, the systems are onerous and they're hard to deal with, and it's scary because it's your money, and it's obscure. So if you, as a normal individual, is trying to start figuring it out,
yes.
You don't even know where to start.
Correct.
Do I phone my broker? Do I phone my banker? Do I phone my financial advisor? Where to start? Do I start on the internet? And we're kind of used to technology now. How easy is it to log into your internet banking application and do a bit of an FX transaction? Yep. How easy is it to log into a trading platform and do a bit of equity transfer? Mm-hmm. If we can pave the ways for those components, because the technology exists for us to do it, why can't we solve the hard problems? And that's where Mesh.trade comes in. We're saying that we can resolve these problems. We can give people access to the market. Mm-hmm. We can give issuers direct access to their investors. Imagine the person sitting within Stripe trying to push their company out, trying to raise good capital for their company. A company sitting in Cape Town trying to get working capital for their business, good quality businesses. How frustrating should it also be for them to go into the market? Mm-hmm. So if we, through our technology, can actually effectively directly connect these individuals and do it in an elegant, easy-to-use, transparent manner, then we are doing our job. And that's the problem that we're passionate about resolving.
Sounds very complicated, though.
It is, but that's why we appoint incredibly smart people. And we try to take care of it ourselves. So what we do is we have an incredible team of software engineers, product specialists. So these are product owners that build our platform and our software. We have a legal team. We have an operational team. We have a lovely marketing team as well, who are all capital markets experts and are passionate about building this. Mm-hmm. But it's a big solution. We can't do it ourselves.
Sure.
So what we do is we go into the market and we partner with the experts in the market as well and ask them to contribute their knowledge and their problem statements as well. Mm-hmm. Because if we join this together, we can shape the future of where the capital markets go. I think that you may have seen that there's news saying that the JSE is seeing a lot of delistings happening, and this is actually something that's happening across the board with a lot of the big exchanges in the world. They're seeing a consistent trend of either just have stability about the big companies that are listed, or they're seeing a large trend for delisting occurring. Mm-hmm. And what we're seeing there is effectively the formal capital markets are dying. Maybe dying is a strong word, but effectively they're changing. The way that we interact with those capital markets are changing because the market is saying we want a more effective and better way of interacting with the market because we want capital and we want to invest. Mm-hmm. So give us ways and means to do it. So we try to get those people to the table to partner with Mesh so we can together build what the new de facto standard will be for the capital markets. Maybe the capital markets will be open capital markets then.
So who are your competitors? Is it the traditional finance industry?
In some instances it can be, but mostly we try not to compete because we're not an exchange. Mm-hmm. We don't want to be exchange. So why can we not partner with the exchange? And right. we've done so as well. So who would be our general competitors? And to be honest, the most innovation that we see in our space in the capital and the financial markets is very distinct around a sphere or a vertical in the market. People making trading more effective. Love that. They're doing great work. People going into blockchain and trying to do custody better. People that are trying to make advice better. But very few people have actually gone across the board. So we've gone across the verticals and re-engineered and compressed the market into elegant flow. And no one is actually doing the 5 pillars of the capital markets that we are doing. And that's our unique selling proposition. We are doing issuance and tokenization Yes, I brought the term tokenization because we are blockchain based. Secondly, we do trading.
Sorry, let me pause you there. What is tokenization and why is it important?
Tokenization is an incredibly important concept, and I'm so glad that you're asking that question. It's a brilliant one. Tokenization is one of the fundamental components of the blockchain. So let me break it down. Let's make it simple, because every time someone brings blockchain into the conversation, the conversation starts becoming complicated and technical, and everyone's starting to think about Bitcoin again, and you're thinking about that person at your bride trying to convince you to invest in their crypto portfolio. And
buy some Dogecoin or something, yeah?
Buy some Dogecoin, yes. So if you're on what is now X and you're following Elon Musk with these Dogecoin analogies, and yes, that is also part of our industry. But blockchain effectively is the underlying technology of things like Bitcoin, Ethereum, Dogecoin.
And they've all got their own blockchains,
and
right?
They all have their own blockchains. And
for the most part.
For the most part, yes. And effectively what a blockchain is trying to do is be a ledger of nature. A database, yes, a very fancy database. So if you're thinking about your T accounts and so forth, you can make line item entries into that database. But what makes it special is that no one can change a line item entry without everyone in the community agreeing. So there is a concept of trustlessness that people bring in, and yes, another complicated term. But basically trustless does not mean the absence of trust. It basically means that we can trust the system because everyone is watching.
Yeah.
The neighborhood watches out, everyone is watching, no one can change an entry without it being seen. So now, where does tokens and tokenization come into play here? So the way that I can describe a token is it's a little basket of data, basically, that I've grouped together, and I call it a token. Some people call it a coin. So if I say Bitcoin, a single unit of Bitcoin is one.
So it can be a monetary thing, but it could be something else entirely.
It can be anything. So anything that is a basket of rights. And some people start bringing in the concept of a smart contract here.
Yeah.
So if I take your house, it's a single unit, and you have an ownership right to your house. Yeah. I can put your house on a token. And
that would typically be on the Ethereum blockchain, would it?
It can be on the Ethereum blockchain. It can be on the Bitcoin blockchain.
Oh, it can be anywhere. Okay.
It can be on the Stellar blockchain. So any blockchain has a concept of creating a token.
Okay.
So let's say you want to sell your house to me. You want to sell that single token that represents your house to me. We're basically saying that we have the intention to transact with each other the same way that you go into your internet banking and you say, hey, I want to transfer 1,000 Rand to someone else. You're saying, I'm going to sell you your house and I'm going to give you cash in return for it. And we're giving this instruction to the blockchain. So what the blockchain then does is it writes in on both sides of the T account, house sold, money given. And it transacts that with each other.
And there's no intermediary involved.
There's no intermediary, but everyone is watching. So everyone can confirm that the transaction happened. Everyone can confirm that the money has actually exchanged hands. And everyone can confirm that the house exchanged hands as well.
So given that there's so much oversight to the blockchain, everyone can watch what's happening. Is there a need to regulate these blockchains? I mean, there's a lot of talk about regulation in the crypto industry. Where is that regulation likely to focus, and does there need to be regulation of the blockchain to get, or is this trustless concept sufficient?
It's an interesting question because the way that we look at this conversation is around what is the principle that we're trying to regulate, and generally we welcome regulations into any form of business in the world. And I think we're all still a bit shaken about some of the bigger news coming out of America in the last year around FTX, and there's fights around Bitcoin, and someone called the SEC is also involved with a couple of the companies, and we've seen these ripples going through the financial industry as well. And some people have hailed the second coming of the 2008 financial crisis, with some of the banks also closing in America. And these things prove that there's a place for regulation to step in. But why are you trying to regulate the technology? You should actually be regulating the application or the principle that people are trying to execute. So blockchain in itself is not bad.
Okay.
Bitcoin in itself is not bad.
But are entities like the SEC trying to regulate the blockchain itself?
You do see some people trying to figure out where is the risk actually lying. What is it that people are actually trying to do? We have concepts such as private keys that are stored that gives you access to your wallets and your tokens effectively.
Right. Your Bitcoin or whatever it is.
Your Bitcoin. And it needs to be kept safe. So there is generally places where you do look at technology and say, is it good? It's the same conversation that people are having around AI.
Right.
What is happening when it starts infringing on my privacy as an individual? So the same kind of concepts have happened in the Bitcoin world, and luckily our technology has been around for a bit longer than AI. So we've already moved away from trying to regulate the technology to trying to regulate the applications or the functions and the services that people are trying to deliver through it, which is good. But we're also seeing that the way that the markets are being connected to each other is changing now, which is also good. Let's have that space for consideration. Let's have that space for the debate to see what is the best way forward. And yes, we all have the need to protect the individual, to protect the businesses, to protect the monetary policies of countries. But we're also here to do business. We're also here to deliver value to our clients. And we're all trying to find a way where we can do that in a responsible manner.
Okay.
And an interesting thing that's happening currently in this industry is that we're seeing an influx of the responsible leaders as well. So a lot of these, what I call the Bitcoin millionaires that everyone jokes around with driving their Lamborghinis and so forth, aren't in the industry anymore because we have responsible leaders stepping in, doing responsible business.
Okay, I'm sure those cowboys are still around on the margins.
There will always be cowboys.
Like FTX, for example. So 42 Markets Group recently went through a fundraising round with Convergence Partners. I forget the figure that was the number disclosed?
It was, yes.
How much was it?
It was around $8 to $10 million that was raised.
Okay.
Yes.
And that went into 42 Markets Group. But I understand a lot of that fundraising from Convergence Partners is actually being directed into Mesh.trade.
The majority is, yes.
Majority. Okay.
Yes.
So maybe take us through that fundraising round and what you're going to be using the money for.
Absolutely. I'm actually 21 years old. The fundraising journey has aged me slightly, but it was a lovely learning experience. And I know for any startup founder, it is a moment of that you actually prove your business. Yeah. So the journey took us a while because we did try to raise in a time where we saw a downturn in the VC market to a large extent. And the great thing about being able to raise through our group is that we could raise through a trusted partner such as Convergence, who is a private equity fund. And what is really interesting about Convergence is they're sitting with something called 14 DFIs in the world. But basically what that means is they're sitting with 14 very trusted parties within the financial industry that is invested in their fund, who's invested into us. So that gives us something called connected capital. And we love working with these DFIs because they are impact investors. So they are really for changing the way the capital markets operate so we can give more access to people to sit around the same table, which aligns with our value proposition from a Mesh perspective and our mission. So finding a partner like that was very unique, and being able to actually take our business forward, not just from a capital perspective, but also from a connection perspective. So what are we going to do with this money is we are going to do a series of launches out into the market. So our first country that we are in is South Africa, and we are going out to market with something called an AltFi offering in the start of January. And what we're doing is we are starting to grow, and we're proving that the value that Mesh is delivering is good. So what we're launching in January is what I call our debt offering. So we have a couple of companies lined up who will be raising debt in our market, and we will do it to an open market. And so individuals such as yourself and myself, we can actually go in and we can invest in these companies.
Okay.
The reason why we call it AltFi is that it's sitting below exchange. So it's not an exchange-traded asset. It is an asset that is completely traded in the open market. We're very excited about it. It's such a cool concept to be able to invest in some of the entrepreneurs in our country who are building lovely and good businesses.
AltFi being short for alternative finance.
Yes.
Okay. And is it always blockchain-based?
No, it's not always blockchain, but it's already happening in the current market construct. It just means that it's not trading on exchange.
Okay.
It's trading off exchange.
Right.
So if you look at a bank's balance sheet, very seldomly do they have 100% of their assets allocated to the S&P 500. They have a very interesting product mix that they're sitting with. And generally the assets that they are invested in is majority alternative financial assets. So we're giving you access to those assets that only the banks can trade in.
Right.
Yeah.
Okay, interesting. So maybe take us through the difference between AltFi. You talk about TradFi or TradFi, the traditional finance, AltFi, alternative finance, and DeFi, not the fridge brand, the decentralized finance is what it's short for. Well, what is the difference between AltFi and DeFi? DeFi is blockchain-based, I presume.
Yes. So these terminologies are starting to come together, but from a general view, as you described, let's just start with the word TradFi, traditional finance. So traditional finance is generally your assets that you would find on exchange. This would be your Meta share, your Tesla share, your Absa share, your Sanlam share, anything that you can find on the JSE, the New York Stock Exchange.
Is it always a stock?
It's not always a stock, no. You can also have something called bonds and debt in there as well, but it's traded in the formal or the traditional market.
You go to a stockbroker.
You go to a stockbroker and you open an account. It's also your ETFs and your ETNs that we all invest in that are part of TradFi.
Okay.
Now, we have DeFi on the other side, and AltFi sits in between these two. So DeFi is called decentralized finance, and it is generally a term that involves any financial activity that's built on a blockchain. So some people will say that Bitcoin is DeFi, but also something like a Aave solution is DeFi, which is a lending pool where you can throw your tokens in and you can make some margin on it. So any solution that is mostly in a blockchain kind of solution. Now, AltFi is always the little bridge in between. It's a little ducky that no one really wants to own, but it's a very exciting part of the industry. And generally, this is a part of the industry that's reserved for smaller companies. So it's not your top 200 performing companies. It's not a company that's listed on a formal exchange, but it is a company that is very entrepreneurially driven, but they're looking for capital to come into their business. So they're either putting out some of their equity or they're putting out some debt. And let's say they want to build a new factory, but they don't want to get a new investor in, or they don't want to go to the bank for a loan. They would actually put out an alternative financial asset saying, I'm looking for money for 2 years. I'm going to build this factory. You can see my operations. You can see my business. And I'm going to go out to the market and ask them to invest in. So hedge funds, VCs, and PEs generally invest in this industry because they're growing those businesses up to becoming the big behemoths that we see on the exchanges.
We had Simon Dingle and Stephen Boyke Sidley, I think his name is. They wrote a book a while ago on
lovely book.
DeFi. Do you rate it? Okay. And they were chatting about the book actually, and their view, and I'm paraphrasing here, and the conversation was a long time ago, so I hope I'm not misquoting them. But their view was that this is terminal for banks. That DeFi is such a powerful concept that your traditional financial industry is going to suffer, and this is going to emerge as the future of finance. Do you agree with that?
It is an interesting view. I've had to think very deeply about this concept given where Mesh.trade functions, because we also do serve the banks. And I think it's maybe naive to think that banks and central banks will cease to exist because they perform a certain function within the banking industry. So what I'm not saying is that their full portfolio, full spectrum of services will still exist, because the market is changing. And they are going to have to relook how they do some of those functions. But generally speaking, when you look at the financial industry, it's a complex industry. And there's two things that are very important that the banks do. Firstly, they sit with a lot of knowledge, because you and I don't deal with the financial industry or the capital markets on a daily basis. So who advises us and tells us what is good to invest in. And sometimes I don't want to manage my own money. I want to outsource that to someone. And the bank is always a responsible party to do that too. And the second component that they do is they create credit in the market, because they take my deposit on the one side and they lend it out on the other side. And so they are actually one of the fundamental components that keeps the economies going. And for that risk, they're asking a fee. There will always be a space in the economy, and especially in our Western economies, for someone to take on that role. Because we're always looking for growth, and we're always looking for capital, and we're always looking for someone that's willing to take that risk to say, I will give you capital, I will pay you interest, and create that credit cycle that we need to grow.
It's that role as lenders that's so critical to the economy.
Very critical.
I mean, one thing about banks is they're generally speaking, I'm not going to say all of them, but they're generally speaking very trusted institutions. You put your money into a bank, you don't believe that money is going to disappear, and you may even earn some interest on it. In the world of blockchains and crypto, etc., there's a lot of distrust because of events we've seen in the recent past, like the FTX disaster and others that have gone before it. So people generally trust traditional finance. It's got a good name. The central banks tend to back up these institutions if they get into trouble, whereas that's not the case with institutions like FTX, for example. How much of an issue is this trust issue as the world of finance is changing and people are exploring things like AltFi and DeFi? Is your ordinary consumer out there ready to, and are they going to be ready anytime soon to look at concepts like DeFi, or are they just going to say, no, that's FTX, that's Bitcoin, that's Dogecoin, we're not going near that? What's your take on that?
So I generally have to look at the fundamentals of what is trust. Trust is a promise made and a promise delivered. And you need to do it over and over and over again to keep on having trust. And that's what they do. I mean, there's certain institutions in our country that has existed for hundreds of years, or let's not say 100, but at least 100 years. And they have a track record of being able to protect people's money and deliver value for them, i.e. they invested and you getting a good quality return. But there has been recent events where we also have lost trust in the more formal structures as well, and that was the origin story behind Bitcoin. Why Satoshi Nakamoto, he actually started writing Bitcoin and saying that there's an alternative. There's a different way for us to look at this.
It emerged out of the 2007, 2008 financial crisis.
Yes, absolutely.
And the white paper that Satoshi Nakamoto wrote was really about dealing with this structural failure that happened. With
the fundamentals of trust and how we should be looking at it. And I mean, Bitcoin may have been the first iteration thereof, and we've learned so much more from that moment. The conversation actually has not changed. It's always around who can I trust and why can I trust them, and the metrics that we use to base that trust on. So your question is, will people be trusting DeFi? And I think yes. We're seeing it not because I'm saying it, but within what the industry is doing, because we've seen consistent uptake in the adoption of cryptocurrencies. And yes, we've had some scandals now, but it happens. And I think the market is readjusting.
A lot of people have lost money. I mean, there was Mt. Gox. There were other instances of billions of dollars in wealth that was stolen.
Yes, but it's the same for the traditional financial industry. We also have so many examples of where fraud also occurred in that. So where you have the bad apples, things will happen. So I don't think it's just restricted to the technology and the industry that we're in. But one thing that's very interesting for me to see now is some of the bigger institutions are stepping into this market. We're seeing that Visa is experimenting. We're seeing that MoneyGram has partnered with Stellar to do remittance payments. We've seen that there is big tier one banks like JP Morgan pushing out some of their solutions to the market. And that is something to take note of. If these big entities that we have been trusting for so many years are also saying, but there's something here, maybe we should also be stepping into this market. Isn't that a trust mark for us to also take notice of and see what actually happens to the adoption of it? And in our own experience, people are getting more interested in it.
If the banks adopt DeFi, if they start to process transactions across blockchains, is that a threat to companies like Mesh, or Do you welcome it?
I actually welcome it. I welcome it. The one thing that is very interesting for them to start stepping into it is obviously they're more comfortable with it. They're starting to trust the technology, so I can do business with them.
Yeah.
Secondly, our clients are taking notice, so they're also getting more comfortable with it, and they're pushing more liquidity into the market. And liquidity is the baseline for any market to function.
Yeah.
Because if there's people spending money, there's people delivering value. And the more and more we can have this cycle going, the better it is for companies such as ours, but also any other company sitting parallel to us in the industry as well. Hopefully there's going to be a lot more trusted stable coins coming into the mix, a lot of more trusted central bank digital currencies coming as well, which will be good for the entire industry.
Yeah. So I wanted to ask about the blockchain that you work on. I see on your website that you've deployed your solutions on a blockchain called Stellar. What is Stellar, first of all? Why did you choose Stellar?
So Stellar is a very interesting blockchain. It's a very trusted blockchain, and it has history and roots in the Ripple blockchain as well. Okay. I think the Ripple blockchain has been in the news quite often. But one of the founders of Ripple actually broke away, and he started Stellar for some of his own principles. And some of the principles that Stellar was based on is that they're very passionate around creating an effective blockchain for currency transactions. So what this means is it's not as a complex blockchain as what the Ethereum blockchain is. It's a lot simpler blockchain. But the reason why we chose it is it's because it's trusted.
Right.
In its simplicity, there's beauty, and it's actually very cheap to use. So our transactional costs are low. So if we want high trading volume to go, we actually need a blockchain that is trusted, and we need one that people can transact on quickly and cheaply. So that was the reason why we chose it at the start, and why we keep on choosing it today.
Does it have its own token as well?
It has. It's the Stellar Lumen. It's called XLM.
XLM.
Yes.
Okay.
Yes.
I think I've seen that one actually. So are you exclusively married to Stellar, or do you work with other blockchains as well? Just maybe take us through how you employ these blockchains and what it means for your clients.
So one of the big concepts or talking points in the blockchain world currently is something called interoperability.
Okay.
And something as simple as when you have $1 in a dollar account, when you transfer that dollar to someone else's account, you don't need to change it. You don't destroy the dollar and then recreate it on the other side. And the same kind of concept is also being talking about in the world of tokens. Because currently one token can't be taken from the Ethereum blockchain to the Stellar blockchain without me destroying it and creating it again. And that brings risk into the industry and into your transactions. But Mesh has been built to be blockchain agnostic. So yes, our first obfuscation is on the Stellar blockchain for the reasons that I mentioned, but we have been built to be blockchain agnostic because we understand that the market is complex and you would need to choose a different blockchain for different reasons. So we will be integrating into a few more blockchains as we now start achieving scale and growing a bit more. We'll have to look at a blockchain that gives us a better smart contract so we can do more and more complex instruments. We can talk about something called a oracle, which is a very complex thing to control life cycles. So we would need to bring in these kind of complexities, but we would also want to support more and more ecosystems. So we will be most probably integrating into something called Solana and maybe Cardano as well.
Okay, I've heard of those two. Okay. And you also offer something called a tokenization engine. We've spoken about tokenization, but what is it? What is a tokenization engine and what does it do?
So just like we talked at the start around what is a token, how is it created, what is a coin, generally when people look at the blockchain, they think that Ethereum and your cryptocurrencies and your stable coins is the only thing that I can really create on the blockchain. But I said I can tokenize your house. So effectively what a tokenization engine does is it creates the tokens. So whatever instruction you're giving us on a contract level, we then take that information and wrap it into a token. And things that we do there is we create equities, we create debts and bonds, we create ETFs, we create ETNs, any structure that you can put on a token. We create it through that tokenization engine.
Okay.
And we currently call that the instrument builder. Very creative.
Okay, cool. And can your clients use this engine themselves to develop these products?
Yes,
Okay.
they can. Yes.
Okay.
So we've taken the complexities out of dealing with tokens, because generally you need a software engineering degree to create it. You need some programming skills, and we know that the most of the people sitting in the market does not have software engineering skills, and that's a barrier to entry. So we've put down a very easy to use UI on top of this complex structure, so people can structure and create and name their tokens whatever they want to, and they can place it on our marketplace and sell it off to our clients.
Now, your average consumer out there, and probably not even your average consumer, probably doesn't really understand fundamentally what these issues are, and fundamentally at a core level understand what DeFi is. What assurances can you give to them that when they do this, they tokenize an asset, for example, that they can trust it? That the money's not going to disappear?
That is a brilliant question. So first of all, whichever country that we operate in, we will be regulated as well. So currently in South Africa, we are an accountable institution. So that means that everyone that we deal with is known. You go through something called KYC when you open up a bank account.
Yep.
The same thing happens when you come to Mesh. We don't deal with people on an anonymous basis because our core business is financial instruments. That means that we have to have trust in our system. So we are firstly a accountable institution. Secondly, we are called a FSP as well. So we're in the process of applying for our FSP license as well, because the Reserve Bank opened up a FSP category for us. So for the people in the know, it's called a Category 1 license, and we are applying for that in South Africa.
Do you do that through the Reserve Bank or through the Financial Services Conduct Authority?
So we doing it. It's called phase licensing.
Phase, right.
Yes.
Okay.
So we
Reserve Bank.
No, it's not the Reserve Bank.
FSCA.
It's the regulator, so it's the FSCA.
FSCA.
Yes.
Okay.
Yes.
And do you only operate in South Africa, or are you a global
No,
business?
so we're a global business. So every country that we go in, there will be some licensing requirements from us. But that's only the first part, like having a license and so forth. We've seen other license in institutions not doing what their license categories does, but trust is a big thing for Mesh, and we have been built to be decentralized to a large extent. So everything that you do on Mesh, you can validate on the blockchain, because transparency is a big principle for us. So when you create that token, you can go to the Stellar blockchain, you can go to the Ethereum blockchain, and you can actually see it on that blockchain. You can see your account. We also don't.
And you tell people how to do this.
And we tell people how to do it. There's a very nice button that you can click that takes you straight through to the blockchain.
Okay.
And you can see the information being there and validated by third parties as well. We also audit where we do need to audit. We open up our house to extent there, especially on our stablecoin that we use called MZAR, but also on our investor side, so our normal clients. The one thing that we do that's very different from some of our competitors in the market is, and this is a problem statement that came through with things like the FTX and Binance debacles that we're seeing now, is there's something called centralized exchanges. So basically you're entrusting them with your assets, and you're hoping that no one runs away with the golden goose, which now has happened. We can't do that because we don't have access to your account. Your account is your account. And if you want to leave Mesh, you can take that account and go. I hope you never leave Mesh, but you can.
Okay.
But in Mesh.trade, all we do is we vault your private keys, but your account is yours. No one else
When you
other
say
than
you vault your private keys, what does that mean?
So what we do is we keep your keys to your safe.
Okay. How do you do that?
And how we do that is through a technical operation called vaulting.
Okay.
So basically in a blockchain instance, every time that you transact, you have to tell the blockchain which account am I transacting from, and I'm signing as the owner of this account that you can do what I said you can do. So you're unlocking that safe. Think about it as a physical safe.
Yeah.
There's generally just one code that unlocks it, or one key that unlocks it. And your combination of your private and your public key, two very interesting concepts, but it would basically be, I am in vault number 2 and my password is my private key. So only you have that code to unlock your
And if you lose
your
that
vault.
key?
If you lose that key, that's the problem statement. That's also why we're vaulting it for you, because we've seen a lot of.
So you keep it in case of.
We keep it safe for you.
Okay.
So we don't have access to it.
What they call cold storage, so it's not online? Or
cold storage is a lovely concept, but you can't actually have cold storage if you're transacting on a daily basis.
That's if you want to buy a bunch of Bitcoin and leave it.
To drive to Mount Doom on a daily basis, go fetch your cold storage key and unlock your vault so you can transact.
Okay.
So it is not in cold storage. It is in something called hot storage. Yes, so we created with these names: hot storage, cold storage, private keys. But effectively, we can only give you access to your vault. You can unlock it. You can sign your transaction. We close it off again, and it's
safe. 100% secure.
Nothing is ever 100% secure.
Yeah. I've read people saying if you don't hold your own keys, your crypto is not safe.
Not your keys, not your crypto is the statement that people put out in the market. But that statement actually came from not your account, not your crypto. So yet again, these centralized exchanges, they keep everyone's crypto in a big account.
Okay.
We call it enterprise accounts. So everyone's crypto is mixing with everyone else's crypto. You can't segregate the children from each other. And that is the danger, that someone can then get access to those enterprise accounts and then go away with it. But vaulting your keys is a lot safer.
Yeah.
And the safest that you can be is what you mentioned is your cold storage, but that's not effective for when you trade a lot.
Yeah.
But the next level that we will be implementing now is something called a wallet structure, where you can bring your own keys. Yet again, the creativity with the name, but effectively you keep your key, and every time that you come to Mesh.trade to transact, you type in your key yourself.
Okay.
But imagine now, if you're not used to doing this, that you have to explain this to your grandmother and she has to write it down on a piece of paper to do it. The market is just not there. So if the market is not there, we are going to put a solution in place that is safe for our clients to use and that is effective to use.
Yes.
And that is easy to interact with on a day-to-day basis.
So, Connie, you've also developed something called Mesh Oracle, and I'm quoting here, a cross-asset capital markets trade and treasury system. What does that mean?
So what that means is we discussed at the start, what are some of the assets and asset types that we see in the capital market. So one of them, which is the most popular one, is equity or stock. But in the capital markets, there are a lot more complex structures. There's things called bonds and loans and derivatives and options and all those kind of things that have been developed over years and years of transacting in the market. And what we do is we need to know how to create these assets, and why would we reinvent the wheel when they already exist?
Right.
And for our more complex clients, they want access to cross-asset. They want to be able to raise capital in whatever means and ways that they want to. So we provide them with these asset classes first of all. But now we have something called coupon payments coming up, interest payments, dividend payments. I think that you may have heard them when dividend season comes around on the stock exchanges.
Yes.
It's when you start holding Christmas very early, when you get that little payment coming into your bank account because you owned APSA stock or ETF, which is lovely. I love that SMS coming through from my bank saying, yay,
Ka-ching.
Ka-ching, yes. So we need to calculate those events happening on all these assets. And what happens in the blockchain world is, how do I tell that token or that owner of that token that you are going to receive an interest payment or a coupon or a dividend? So we first of all need to tell our issuers, you put 100 million rand out into the market, you have 10 owners of that 100 million, and you have to pay them an interest payment on whatever day of the year that interest payment occurs.
Yeah.
So who does that calculation, and who does that distribution of that cash to those clients? Well, Mesh does it. Mesh.trade does it. So we first of all calculate that big amount, we divide it into the small payments, and we distribute it out into the market, so you can get that ka-ching coming into your bank account at the end of the day.
Okay.
And what controls that is the Mesh Oracle.
Okay, good. Lastly, I just want to talk about what people can do with the Mesh platform. Let's take my example. I'm an investor who doesn't necessarily understand the world of high finance particularly well, but I've got a few shares and things I've invested in. Am I a potential customer for Mesh.trade, or are you looking at more high net worth individuals who trade in derivatives and all this sort of thing? I mean, what is the target client base here?
At Mesh, everyone is welcome. Everyone should have access to the capital markets. So even if you just have 10 Rand to invest, or you're one of those high net worth individuals that already knows the complexities, there's something for everyone in Mesh. So you can come and you can invest into a Bitcoin, you can buy ETFs, but you can also get access to these new companies coming up and get the opportunity to be the first through the door to invest in the up-and-coming entrepreneurial venture. But how do we make it easy? How do we distribute that knowledge to people to be able to go from I have no knowledge of what a stock is to I have all the knowledge of what a stock is? And that is where we're trying to translate knowledge to the market. So we're trying to make it easy for you to invest your assets, because we know that the capital markets are complex. We know that you don't watch the prices on a daily basis. So what information do we need to give you so you can make an informed choice of what to do with your money? And believe me, it's not that complex. Don't believe all the lies around the analysis and the charts that you need to create. Consistent investment is always key. So we provide you with all the information so you can make an informed decision. We're also making it easy for you to transact within your means as well. So we won't be effective if we don't understand our end clients and we can't enable them to use our application. So no, you don't need 5 PhDs to trade in the capital markets.
Very often, though, retail investors make decisions on investments based on advice given to them by their advisors, which is often an advisor who works for an Old Mutual or a Sanlam or one of those companies. Do you work at all with those big traditional financial institutions to make them understand what it is you offer, and that this is something that they can offer to their retail clients?
Yes, we do. So one of our current partners in the market is Efficient Private Clients, and they are one of the biggest networks in the South African industry with regards to unit trusts and ETFs and investments into those asset classes, and they work very closely with their advisory network as well. So as we start gearing up for the next phase of Mesh, we'll also start interacting with a lot more financial advisors, because we understand that 1 in 2 investors in South Africa actually uses a financial advisor. So we would also like to offer them a greater access to a better product mix, and also allow them to exist, because they contribute very valid and very needed knowledge across the board, and they also have a reason for existence here. Yeah. So giving them a place where they can also transact.
And if I wanted to trade crypto like Bitcoin and Ethereum or Dogecoin, can I do it through Mesh?
Yes, you can also do it. We don't offer Dogecoin, unfortunately, but we do offer quite a comprehensive collection of cryptocurrencies as well, because most people actually have 5 to 6% of their portfolios currently invested in crypto.
Okay.
I think there was a very popular financial advisor in South Africa saying that she doesn't know where the technology is going, but just in case, she's putting a little bit into it every month.
Okay, interesting. So how many crypto types or coins can you buy on Mesh?
So Mesh? Currently we have 15 cryptos listed.
Okay.
And it's the biggest one. So it's the known names such as your Bitcoins, your Ethereums. You mentioned Stellar Lumen earlier. We have Ripple. So the big names you can buy on Mesh. Okay.
And I presume your business model is built around transaction fees. What does that transaction fee structure look like?
Yeah, so we have quite a comprehensive transaction fee, but because of the technology that we are driven by, we are very cost effective. So every time that there is a transaction, we do take a fee, but there's no barriers to entry. So you don't have to pay us to open up an account. You don't need to pay us to actually get access to the market. So if you see anything that you like and you want to transact in it, when you do buy a Bitcoin, we do take a transaction fee. And as
is that a flat rate across the board, or does it vary?
It's a flat rate across the board.
What is the percentage?
Yes. So on a secondary market trade, which is just your general trading on your Bitcoins and your ETFs, we take a 0.2% fee on that from the person initiating the trade. But when you are dealing in something called a primary market, you actually don't pay a fee as an investor. Because the person raising the capital will be paying our fee. So it's free of charge for the investors to invest into these kind of assets,
right,
which is completely new in the market. Generally, the investors also have to pay.
Okay. And while I've got you here, that's a little bit off topic, but I think it's really, it's been in the news in the last week, so I'd be remiss not to ask you about it because it's not something I've followed closely, but I see there's a lot of interest in it, and it actually spiked the price of a number of cryptos in the last week, and that's news around ETFs and ETFs' abilities to invest in cryptocurrencies. And there was some fake news, I think, that went out on Twitter or somewhere.
It's always Twitter.
About it usually is, yes. Saying that there'd been approval of one of the ETF applications in the US. Turned out not to be true, but Bitcoin spiked 10% and some other cryptos went up even more than 10%, and then they all came back down again when it emerged that it was fake news. What's the big deal about these ETFs and crypto, and why did the market get so excited suddenly?
Yes, I think the original one that came out was a Bitcoin ETF being put out by one of the more trusted asset managers within America. And the reason why that's so important is it's actually showing that some of the big institutions are starting to trust this asset as well, and their clients are willing to invest in it. Why would these big institutions start moving if, firstly, their clients weren't asking for it, and secondly, it wasn't economical and safe for them to do? So that's very important for us because that means that there is money flowing into this industry and trust flowing into it. So it is a bit of a milestone for our industry to have a asset such as the ETF that is regularly traded coming out to the market that is based on Bitcoins and other cryptocurrencies as well. Okay, so
it lends more legitimacy to the asset class in a way. Are there any moves afoot in South Africa around ETFs and crypto? Is there anything happening with the FSCA or the Reserve Bank or whoever is responsible for the regulation here?
So South Africa is always a interesting one because in Mesh.trade we've already tokenized 15 ETFs and 1 ETN.
Okay.
So you can already access some of these bigger assets on our platform because we've created tokens around them. It's cool. We have some S&P 500.
So you've already done what the Americans want to do.
We've already done one, and we've done it within the regulatory gambits that South Africa already affords us to. But this is something that we call a right to an ETF. So you're buying a economical right to it, but you're not buying the underlying ETF. Actually. But what is now different from what is happening in America is the portfolio company in which the ETF is invested is a Bitcoin. So it's just the other way around. So currently, I don't know whether they are going to tokenize that top level ETF. I hope they do, because why would you base it on a Bitcoin if you don't tokenize the ETF itself? But effectively, in South Africa, you are allowed to create a portfolio of these assets, and I believe that the regulators are quite friendly in this industry, and they are interacting with people. No one has been given the right to put out a crypto-based ETF just yet. But there are a couple of other companies that are putting out bundles and baskets in the market to actually give people easy access to these kind of assets without it being a ETF or ETN that is listed on the stock exchange.
It's a brave new world in finance indeed, and I think I've learned a little bit more about it today, though I think I still need to do a lot more reading on the topic. But thank you, Connie Bloem, co-founder and MD of Mesh.trade, which is your website address as well, right?
Yes, that's true.
Thanks for enlightening me and our audience about the world of DeFi and AltFi. Thanks for joining us in the TechCentral studio today.
Thank you very much.